Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This is all my own original work, as I think you deserve to have that. So with that, Eurodollar. A bearish engulfing pattern yesterday, if only just, and almost but not quite a key reversal down. This coming after the previous 5 sessions were consecutive bullish white soldiers, but as I said yesterday, many of them had been unimpressive. The top was again capped by the very slowly rising mauve medium moving average, currently 116.65, whilst the downside was supported by the 2019 high at 115.70, and on a closing basis by the November 2020 low at 116.02. I studied this in the cable chart carefully yesterday afternoon, and as a result I have overhauled some of the patterns. Thus for now I still have highlighted in dark blue the recently breached mid-September to mid-October descending wedge pattern. This pattern has been disappointing in trying any attempt higher, enough that I've retired the potential target's topside, if not the actual pattern itself. Additionally, I have now drawn in bright red an early July to date shallow bull channel, which is currently 114.85 to 119.63. This is not a perfect pattern, as there have only been 3 touches and only 1 on the downside, but I think this best describes and encompasses the recent action. There continues to be one other feature which I need to bring to your attention. It's something that I've now said repeatedly since about March this year. We are set up with nearly 10 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday the 31st of December 2025, either over 110.36 or under 103.53, then would be on. Anything in between would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up to achieve one, though right now it looks very much like an annual key reversal up. Now, so far today, a small reactionary move back up from the November 2020 low, but nowhere near as yet to the overhead mauve medium moving average resistance. Cable, aka sterling against the US dollar. An interesting second bearish black crow yesterday after the previous session's very interesting combined immediate countering key reversal down and bearish engulfing pattern. Prices pushed down below the congestion that was tapped in the previous session between 132.46 to 132.98. That contains the rising gold long moving average, currently at 132.51, and dropped down through a fairly clear zone, one that I'd highlighted previously, down to the next congestion between 131.18 to 131.44, containing the December 2020 low at 131.33 and the July 23 high at 131.44. This congestion is important as it stopped the decline from the previous head and shoulders top back in August, so be aware of that. I studied this chart and the one on Eurodollar in some depth yesterday afternoon, and I've overhauled some of the patterns. The key pair of head and shoulders tops remain, along with their necklines. The older mid-May to late July head and shoulders top with a purple neckline, currently at 133.32, and the more recent and somewhat complex early August to mid-October head and shoulders top with a bright red neckline, currently at 132.99. We have had a significant close below the latter and more recent head and shoulders top pattern. And I yesterday laid out some potential targets below for such a break lower. Thus, a primary target X would be down in the 131.10 zone, with a harder to reach secondary target X1 down in the 128.97 zone. Yesterday's action came awfully close to target X but did not quite manage to reach it. Additional to this, the action since mid-May to date can also be seen as a possible quite large double top pattern, and with all the overhang we have, and as I've repeatedly said, and I quote, it would seem to be a reasonable force to tackle the supports, however much they may number, end of quote. For all this action, I've also added a new pattern potential, a dark blue, early July to date, very shallow bear channel, and that's currently at 130.67 to 136.94. This is not a perfect bear channel by any means. It's only had 3 touches and 1 on the downside, but I think this pattern best fits the recent activity. We now wait and see if the congestion between 132.46 to 132.98 will halt the decline, as it did back in August. Finally, much like Euro-Dollar, there continues to be one other feature which I need to bring to your attention, and it's something I have now said repeatedly since about March this year. We are set up with nearly 10 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday the 31st of December 2025, either over 110.36 or under 103.53, then we'll be on. Anything in between will have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up to achieve one, though right now it looks very much like an annual key reversal up. So far today, not much. Either side of yesterday's close within a fairly free zone, which is moving towards the bottom end of that range at the moment. US dollar against the Japanese yen. An immediate countering bullish harami yesterday, if only just, as well as an outside day after the previous session's bearish opening black Marubozu and second bearish black crow. Prices dropped down once more below the combined October 22 high at 151.94 and the November 23 high at 151.92, but stalled once again at the old August 1990 high at 151.58. Closing back up over the lesser Fibonacci line at 152.52 and towards the overhead bright red upper bull channel line currently at 153.35. This bright red trend line is part of the overall pattern for this very recent market move higher, and that is the April 25 to date bright red bull channel, which is currently 147.40 to 153.35. We also seem to be setting up for a possible small October base double top pattern, but this hasn't quite happened. It's now looking like it may be a possible October-based bullish halfway hesitation. It is early yet, but right now this does start to look like likely in the bigger picture. Now, actually, in the even bigger picture, we're also still within the important large, shallow, and longer-term early July 24 to mid-January 25 bearish shift pitchfork, closer to the dark blue upper time, currently at 154.14. Now, so far today, a breach of the bright red upper bull channel line on the upside with prices accelerating higher, and that's now towards that dark blue upper time. Beyond this, we next seemingly have resistance at the June 1990 high at 155.78. US dollar against the CNH, the offshore Chinese yuan. An indecisive doji cross yesterday, and possibly day 2 in a 3-day bullish morning doji star pattern. This will now depend on a higher action happening today. This all follows the previous session's second bearish black crow yesterday and follow on to the earlier earlier bearish opening black Marubozu and bearish engulfing pattern. Now, despite prices having ended up with their lowest close 2 days ago, the opportunities for a recovery higher seems actually very valid. This despite the market being below all the moving averages, until recently traveling down the attractor of the bright red extension to the lower trend line of the mid-January to late April 25 descending triangle pattern. That's currently at 712.15. Overhead we have Fibonacci congestion between 714.48 to 714.95, plus the green short medium moving average, which is currently at 713.21, and the medium moving average currently at 715.28. Meanwhile below, well, there's not much bar the September low at 708.45 until the congestion between 706.32 to 706.57, made up from the 50% Fibonacci line of the October 22 to April 25 move and the June 2023 low, respectively. However, the market has until recently seemed shy of testing that far down. So far today, a seeming recovery higher, and thus setting up to fulfill the opportunity for today and the past 2 days being a 3-day bullish morning doji star pattern. I'm also wondering if this may now set up August, the action since August to date, as a possible triangle pattern. US dollar against the Brazilian real. An indecisive doji cross yesterday with a long tail after the previous session's second bearish black crow. The market has recently been capped by the green short medium moving average, currently at 538.94, and pushed down and closed below for a second consecutive session, the August and July 2024 lows at 537.59 and 536.76 respectively. Further above is the 61.8% Fibonacci line of the October 19 to December 24 move of 541.57, whilst below, well, we have a small free area until we reach down to the 38.2% Fibonacci line of the July 19 to December 24 move of 532.15, which we seem to have rejected yesterday. Overall, in the bigger picture, the market still continues lower within the bright red mid-December 24 to mid-April 25 bearish shift visual, sitting in between the overhead bright red middle time, currently at 543.97, and the bright red lower time below, currently 518.06. We have near to the middle time above two other features: the declining mauve medium moving average, which has astonishingly traveled down, locked in with the middle time since about June, and the dark blue neckline extension, currently at 543.83, of the June to September 2024 head and shoulders continuation pattern, though I suspect this last one is less of an influence these days. Meanwhile, further below we have the 38.2% Fibonacci line at 527 of the October 18 to December 24 move, and the 61.8% Fibonacci line at 524.07 of the April 22 to December 24 move, with the bright green May 24 today uptrend currently at 528.61, and that's in between. And then, well, not much bar the bright red lower time until the 50% Fibonacci line of the October 19 to December 24 move at 513.82. US dollar against the Mexican peso. A second bullish white soldier yesterday after the previous session's indecisive spinning top. That could also be seen as a bullish thrusting pattern. The market, for the most part, has since about mid-September seemingly been held within a small dark blue bull channel, and that's currently 1839.85 to 1873.98. However, the immediate resistance, which seems best effective on the closing basis, is made up from three parts. Firstly, a lesser Fibonacci line at 1850.81. Then two, the February 2020 low at 1851.71, and finally the flatlining green short medium moving average currently at 1849.14. Further overhead is now flatlining mauve medium moving average currently 1861.06. Indeed, the close in overhead resistance is seemingly squeezing the market against the dark blue lower bull channel line. And I suspect something will have to give soon, as the market's room for maneuver is getting less each day and runs out completely in late November. Just watch out for two things: a possible explosive move, and two, also false breaks. Now, so far today, a small dip from the open, as we are so close to the overhead congestion, but then the market has reverted back up there. Watch this market carefully.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.